Did you know there was a hidden method to boost your state or federal pension by 10 to 15% on a guaranteed basis? So my wife's a kindergarten teacher, and I realize how confusing and stressful this stuff is for her whenever she has to think about it. And when we first got married, I really wanted to dig into this problem because I was getting paid to help other people with their retirement plans. And meanwhile, this whole pension thing represented a pretty good chunk of our collective retirement income. She procrastinated and resisted, which is totally normal. I get it. But thankfully, she finally gave in so that I can get in under the hood and see what was going on. And once we dug in together, I showed her how by fixing this one hidden little glitch inside her state pension could buy us an extra vacation each and every year throughout retirement, or possibly even help her retire earlier. She couldn't believe it. And when I broke it all down for her in simple terms, she said to me, "That's amazing. You should have been a teacher." And I said, "Honey, I am a teacher." And that's exactly what I'm going to show you in this video. I'm going to break down the problem inside every single state and federal pension and show you how to fix that one hidden little glitch so that you can get an extra 10 to 15% of your monthly pension as a raise all throughout retirement. So without further ado, let's get into it. For most of your adult life now, you've been working for the same state or federal entity, and you've been silently contributing to their pension program each and every year. You don't really have a say in the matter. Your union negotiates it, just comes out of your check, but it's a good deal because when you're done working, they're going to promise you a very high percentage of your pay coming back to you for the rest of your life. Now, that's the good news. The bad news for married couples is you're not done contributing to the pension program. In fact, you're going to have to keep contributing to them for the rest of your life. What I mean by that is this. When it comes time to retire, the pension provider is going to give you multiple options. One is called the single life option that says you get the highest payout possible, but it stops as soon as you pass away and your spouse gets nothing. Or if you want to make sure your spouse gets all of your pension or half of your pension or 3/4 of your pension, you can withhold some of your pension payout and it essentially goes back into the pension pool. Meanwhile, a lot of you are so responsible that you're also contributing to other retirement plans like a 403B plan, a 457 plan, your spouse's 401k plan. And again, you're contributing money or withholding money from your check to try and build up a big number so that you can have more retirement income later. But the problem with this is it's inefficient. You got one foot on the gas trying to maximize your retirement. Meanwhile, you don't realize you're coming up to a red light and you're going to have to slam on the brakes and reduce your retirement income. And this is where pension maximization comes into play by proactively aligning all the different financial efforts you have towards maximizing your retirement and doing so in a way where you can take the highest possible pension on a guaranteed basis, making sure your spouse is no worse off had you chosen one of the smaller joint and survivor pension option. In fact, your whole family's better off, and I'll tell you why. We first need to take a step back and look at exactly what that means to take a joint survivor benefit. When you're having money withheld or you're sending money back to an institution to make sure that somebody else gets money when you die, what are you essentially buying? You're buying life insurance. It's not called that. It's called a joint and survivor option, which ironically is a term made up by life insurance companies when they're dealing with annuity products. But basically, it's just a mini life insurance policy that you're going to pay for all throughout your pension to make sure that it continues if you were to pass away. One of the problems with getting this quasi-life insurance policy by reducing your pension throughout retirement is you never tested for health. So if you're even remotely healthy, they're actually averaging you in with the good, bad, and the ugly, and you're all paying the same price versus if you had acquired your own life insurance outside in the free market, perhaps you could have paid a lot less because they're isolating your health. Not to mention, you're younger if you haven't retired yet. And we found that this still works for people just a year or two away from retirement because they are younger than when they retire. But that's not even the worst part about this massive group life insurance program you have by reducing your pension. It actually kind of reminds me of how life insurance started back in the ancient Roman times. So it used to be when soldiers would go out to battle, one soldier would go around to everybody's house and collect a coin, and then whoever didn't make it back from battle, their families would split whatever's left in the coins. And that's a lot like what happens in your pension. If you have an untimely and early demise, well, you get a share of those coins. And if you don't, if you live a long and healthy retirement, well, at least those coins went to somebody else's family. Not so with private market life insurance. Everything you put into that cup, everything you contribute will either go back to your family in the form of a death benefit, or you can take it yourself as supplementary tax-exempt income. Remember how you're already contributing to a 403B, 457, 401k? Well, by contributing to this type of program, not only do you get to check a bigger box that guarantees you have a bigger income throughout retirement, but you also now get this tax exempt supplement, which is really important because all those things I mentioned plus your pension, none of it's ever been taxed before, and it's going to be exposed to future higher taxes. But I digress. Let's go back and prove the power of Pension Max by looking at the only 4 possible things that can happen once you retire. And we're going to look at this whether you chose a lower joint and survivor pension payout from your traditional pension plan, or you were proactive and did Pension Max using life insurance. So we'll start with the least likely and most morbid outcome. I apologize. Let's say you reduced your pension to make sure your spouse was taken care of if you were to pass away early, but then you both passed away in a car wreck. What happens to all the equity in your pension? Do your kids get it? No. What happens if instead you proactively set up Pension Max and your spouse was the primary beneficiary and your kids were the secondary beneficiary? Would your kids get all that equity in your pension? Absolutely. They get a tax-free death benefit. Okay, that's scenario 1. Scenario 2 is, let's say you do the responsible thing and you reduced your pension so that your spouse was taken care of if you passed away early, but then all of a sudden she passed away early. What happens then? Well, this depends by the actual individual pension plan. Most of the time, it's an irrevocable option, so you still get the smaller pension payout even though your spouse can never receive a joint and survivor benefit. But you're kind of locked into that. You can't go retroactively choose your kids. What about if you had done Pension Max using life insurance? Well, if your spouse were to pass away early, you have a couple of choices. You can not take extra income and have a bigger check go to your kids when you pass away, or you can take this extra tax-free supplemental income, or you can do some combination of both, or you can choose each and every year depending on how they behave. All right, scenario 3 is the most likely outcome, and that's you choose a reduced joint and survivor payout for your spouse, but you both live a long and healthy retirement. Well, what happens? You enjoyed 2 decades, maybe 3 decades of a lower paycheck than you could have enjoyed, and when you both pass away, your kids get nothing at all. How about with life insurance? If you set up Pension Max using life insurance, every year you get older, your spouse actually needs less and less death benefit to provide the same amount of income because they're also getting older. So every year you can choose to take a supplement, or again, if legacy is your goal, you can keep it ballooning in the policy to make sure that your kids continue to get a large legacy payout. Now, the 4th scenario is also highly unlikely to happen, but we find that the vast majority of married pension participants will choose a lower joint survivor option so that if they were to pass away prematurely, their spouse will continue to receive payments, even though most likely it'll just reduce their pension for their long and healthy retirement. Now, you have to do that as a responsible head of household, but we already saw that doing it through the pension company is inefficient because your health is lumped in with the good, bad, and the ugly, and you disinherit your kids if for whatever reason your spouse also passes away prematurely. And that's why working with life insurance agents and financial planners who specialize in this pension maximization strategy can help you fully hedge against the unexpected downsides that are possible, while also giving you the optionality to enjoy extra supplemental tax-exempt income while you're alive, or leave a tax-free legacy for your kids instead of disinheriting them completely. Now, I realize a lot of you are thinking, this sounds great, but the last thing I need is another bill for an insurance policy. I want to remind you that you're already contributing a lot of money on a monthly basis to financial programs you don't understand inside your 403b, 457, 401k, and you're doing so in hopes that you're contributing enough money. You hope that it grows to a large enough sum that you can outlive, but you never really know for sure. Versus by having a carefully calibrated Pension Max strategy, we can scientifically pinpoint exactly how much you need to guarantee the hedge so that you can check the bigger box and enjoy more retirement income now, not to mention the tax-exempt supplement that you can continue to take every year that you don't pass away early. But I'm not just expecting you to take my word for it. We realize the burden of proof is on us. However, we know we have the truth on our side, which is exactly why we're offering a free consultation with one of my hand-picked team members who's an expert in pension maximization, who can take your unique variables of your word problem and show you the proof using guaranteed insurance products, how you can create more pension income while you're alive while hedging for your family, making sure that they end up with more than if you had chosen a joint survivor reduced pension benefit. So book your free call today, and we'll talk to you soon.